Hello everyone, this is Avijit Chatterjee. Welcome to our weekly session of Chartsarefun. This is for the week of June 22nd, recording this on the morning of June 28th. We have two services, our Chartsarefun Substack site, chartsarefun.substack.com, and then those are daily blogs that come out, and then our YouTube site is Chartsarefun, where we publish weekly videos. We appreciate you subscribing to both these services. They're free of charge. Our insights here are really to share fun chart patterns. We don't provide investment advice. And hopefully, if you like these patterns, appreciate you hitting the like button both on our blog site and our YouTube site. Today, we will talk about the AI trade that we know has had hit an extremely euphoric peak with Micron's earnings last week. Micron announced blowout earnings. We're talking about, as you see here, 346%, which is 4.5 times revenue growth from year over year. So we're talking about the earnings or the revenue that was announced June of last year, which is around 9 billion. They announced over 40 billion of revenue. Huge demand for memory chips. That's what Micron is, one of the leaders of memory. Data centers are, as we know, initially we saw massive growths of GPUs. That's how NVIDIA benefited. And then from there, it has grown to, with the agentic, huge needs for CPU and memory, adding capacity on the data centers. And we know that there's over 720 billion of capex spending from the hyperscalers, the Googles, the Amazons, the Metas. They're all heavily, heavily investing in GPUs. And all of that is driving demand for data center and AI spending, especially on the infrastructure side. So blowout earnings on Micron, you can see that 41 billion of revenue. Their expectation was $20 of EPS. They blew that away, announcing $25. So what did Micron's chart do? Absolutely gapped higher. We can see here from the previous day, this was on Wednesday. It had hit an intraday low of 991. It gapped higher and hit 1255 the following day on Thursday after earnings on Wednesday. And then on Friday, this candle pattern that we see is called a shooting star. It's a bearish reversal candle pattern. What happens is you get a long wick towards the top, a very short body towards the bottom of the candle. And this means that intraday it had touched a peak, pulled back with selling going on throughout the day and closed towards the lows of the day. This, with extremely high volume, is a negative bearish reversal pattern. So you got to see what Micron does. We can definitely see a very parabolic climb. Not too far back, even late March, it was sitting like trading around $300. From 300 to 1255, you're talking about a factor of 4x of like explosive stock market performance. But look at RSI, lower highs in RSI. That's negative divergence. Look at MACD, lower highs in MACD. So we got to be careful on this AI trade. It's time now to start booking profits. Smart money in many ways started booking profits on the Magnificent Seven players. Magnificent Seven players hit an exhaustion towards early June because there was already fear with all the capex spending that they're doing. Who are the Magnificent Sevens? The Googles, the Amazons, NVIDIA, and everyone else. Take NVIDIA out because they're the beneficiary of the capex spending, but the market is fearing that the capex spending might be hitting a peak because now the free cash flow has been tapped on. Amazon, Google, they're hitting kind of extremes on their free cash flow being all invested in infrastructure, which is now leading them to raise debt. Google raised over $80 billion of a secondary debt to kind of start fund their capex. Similar news was there about Meta. So that kind of concerns in the market. Market always looks ahead that perhaps we might be hitting a near-term peak, a near-term exhaustion on this AI craziness. So even though Micron had blowout earnings, 25, $20 was expected on EPS. They blew out numbers at 25. That's just one quarter of earnings is 25. So if you take for the full year at that rate, if they can sustain that, you're talking about $100 of EPS. $100 of EPS at $1,200 stock prices, 12 times P by E. That's dirt cheap. Market sells at over 23. That said, you have to realize that these are cyclical stocks, cyclical industries. They go through booms and bust. We are now hitting almost an extreme exhaustion on this boom is what we could watch out. Now, there is a very key bearish technical pattern called a bearish engulfing pattern. This is the stock chart site. It's the chart school where they explain the technical patterns. And here they interestingly explain what a bearish engulfing pattern is. It starts with two candles, a positive candle, and typically ends with a reversal of an upward trend, or if it could be bullish engulfing, in that case, it's a reversal from a bearish trend going higher. This particular chart of four that they're showing, that you show in Stockcharts ChartSchool, that white candle is a smaller body, and then it prints a bigger body red candle, as in it closes lower the next day, where it kind of engulfs the body of the previous day. A shorter white body completely engulfed by the bigger red body, two alternate days, and that bearish engulfing starts the reversal of a topping pattern from where market tends to go lower. And we can see here with the Ford Motor, it was rising on an upward trending line. It broke below the trend line and then went to lower lows. Let's look at some chart patterns. Let's look at this candle pattern. Instead of looking at a daily chart, we're going to look at weekly charts to get a bit of an idea on what is going on from a weekly perspective. So this is the weekly chart of S&P 500. Few weeks back, like 3 or 4 weeks back, we already had a bearish engulfing chart pattern. We can see that from the 7620, that when S&P hit that peak that week, the candle, red candle, totally engulfed the previous week's white candle. So that's a bearish engulfing, closed at the lows of the week. From there, we got two doji candles, which are also kind of indecision candles. Often they come towards reversal peaks. Then we got another bearish engulfing candle last week. The body, the red body, engulfed the white, and we can see it had a kind of started at the top of the candle and closed towards the lows of the candle with a low wick. So that bearish engulfing with a lower high in RSI, MACD histogram beginning to dip lower, indicates that we could be setting up for a classic summer pullback that we often get in the market after an extreme climb. We can see that extreme climb from that low that we touched towards 6,300 in the end of March from the Iran war, went up to 7,600, right? We went 1,300 points in a span of maybe maybe 8 weeks, right? From end of March to end of May. So over 2 months, over 8 weeks, we climbed there. And then from that early June, we can see that reversal shaping up. So this is something for us to be concerned about. And then the tech-heavy index, the Nasdaq, which was heavily dominated by the MAX7 companies. Even though the MAX7 companies have pulled back, we'll show you a chart of MAGS, which is the Roundhill Mag7 ETF. The memory stocks now have played a very big role. We're not talking about the memory stocks, are not in the MAX7, because the MAX7s are primarily the hyperscalers. So the memory stocks and the chip industries that support that are been on a roll, absolutely on a roll. And the key memory stocks or storage stocks is Micron, SanDisk, Western Digital, and Seagate. There are those that are in Korea, which has caused the Korean index to shoot to the sky, such as Samsung and SK Hynix. SK Hynix is actually preparing to do an IPO, taking advantage of this craziness in the memory sector. We'll see how the timing of that IPO pans out, but near term, this looks bearish on the S&P 500, the SPX, and looking at the QQQ, a very similar bearish engulfing candle right there. A white candle the previous week, the next week, the entire red candle, which is a down week, right? We came down 4.5% for the week. We can see that as the bearish engulfing candle printed it twice towards early June and then again towards the end of, this is the last candle for the month of June, because next week we are going into July, a couple of days to end the June 29th and 30th, and then 2 days into July, and Friday the market is closed. But this last candle in June, the full candle in June, is a bearish engulfing like we saw towards early June. Two bearish engulfing candles, lower high in RSI, again a negative divergence in QQQ's weekly chart, and look at the MACD histogram, has begun to curve lower. When these kind of bell-shaped histogram patterns curve lower, as you've seen here, whenever they curve lower, for a few weeks, they will just go down below the zero line, base out, and then start the next climb. So we wouldn't be surprised if this is the beginning of a topping pattern for the intermediate for the next couple of months. So this could have been the topping pattern in the market for now. We go down to test. A key level we're looking for the QQQ to test is if we look at the 747 and the 685. 747 to 685, we're talking about $62. Subtract $62 from 685, 623. Where is the rising moving average? We can see that the 50 period moving average is rising. Right now is at 630. So at the minimum, we would not be surprised. Well, it's not at 630, it's at 620. So we would not be surprised for it to not just meet the 623 target, but this is going to be climbing anyway because the upward trend, this moving average is climbing. So by the time in the next few weeks we get that pullback, this could be at 623. And we notice that this breakdown from a 747 to a 685 measures to a 623. So a test of the rising 50-week moving average is very likely. So multiple things, the lower high in RSI, negative divergence, MACD histogram beginning to curve lower, getting ready for a dip below the zero center line, which is a bearish pattern, and two bearish engulfing patterns in the span of the same month with two dojis in the middle. Something for us to be very careful about. Now let's look at the hottest sector, the semiconductor, the SOXX, iShares Semiconductor. What did it print? Whenever you get a larger candle, the more bearish it gets. We look at the definition on what the stock chart says. The bigger the bearish reversal is, the more bearish the pattern is. So the SOXX, look at how big this reversal candle was. A shorter body on the previous week when it closed towards the highs. Here it crossed that. SOXX crossed a higher high at 650, but closed below the 600 level at 589. So 589 to 650, right? That's just right there. You're talking about 60 points, 61 points subtracted from 590. 530 at the minimum is where we think this could drop even further down. Wouldn't be surprised because this is a parabolic vertical climb. Look at RSI when this topping pattern happened, also at a lower high. So negative divergence. They overbought, no question, but slightly lower high every time the RSI printed a high. And then it pulled back sharply, getting very close to dip below the 70 key overbought marker. So RSI dipping lower, same thing MACD histogram after forming a bell shape over the zero center line for several weeks is now printed the first lower MACD histogram, a lower high below the previous week's MACD histogram. So this is the beginning of a pullback in the semiconductor industry. So we wouldn't be surprised to see a sharp pullback in the semiconductor industry in the weeks ahead. Got to be extremely careful. Now we're going to go look at some of the key stocks in the semiconductor and the SOXX index that have been driving this bearish pattern. The biggest fab out there in the world is Taiwan Semiconductor, TSM. Look at its weekly candle, a very similar bearish engulfing candle. This week's candle took over the last week's candle, engulfed it completely, red pullback candle. This RSI has already dipped below 70 now, closed at near 66 or 67. The MACD histogram also printed a lower high from the previous week's MACD histogram. This is ready for also a bearish reversal for us to be looking at. Intel, the story stock, the huge investment from the US government, tremendous amount of contracts that they're getting from Tesla, that they're getting from Apple, companies that are looking to invest in Intel's fab and make chips there. Look at its bearish engulfing candle, a red candle pullback. Look at the RSI, much lower high when Intel hit its peak near 140. It hit a peak at 141.15, pullback, printed a bearish reversal, engulfing candle, lower high in RSI. Look at MACD histogram. It's already begun to kind of top out and begun to start declining. So MACD histogram decline indicates this has got a ready for a bearish reversal, bearish engulfing, RSI dipping down from a lower high, all indicating the prepare for, look at its vertical climb, right? From a level in the 40s, it climbed over to 140. In fact, it was even in the last year, it was even hovering around the 20s. Factor of 7x is what Intel climbed in a span of less than a year because of the US investment, the confidence that US is going to invest in our own semiconductor technology, and the US owns now a decent part of Intel, leading towards its huge vertical climb. So that's a warning sign with this bearish engulfing. What about AMD? Heel to heel, AMD and Intel are beneficiaries of all the CPU buying in the data centers. AMD also makes GPUs, but CPUs is hugely driving their demand. Bearish engulfing there as well. Previous week, it had kind of had a spinning top doji pattern anyway, and then followed with a bearish engulfing the following week. A higher high, a slightly lower low, but with a body of the week taking over the body of the previous week, completely engulfing it. Look at RSI, a lower high in RSI pulling back. Classic negative divergence. Look at the MACD histogram, begun to dip, like lower highs of MACD histogram begun to signal a dipping. Very careful with AMD, very careful with Intel, all the semiconductor stocks. Another story stock in the ASIC industry. They've been hugely popular making ASICs for the AI industry. Look at its climb. Marvel was flat for several months at a time into 24-25, going nowhere, trading in a range between 45 and 100. Broke out, and boy, did it climb. From that late March, from the 100, multiplied three times. 329 was its peak. That was the previous week. Look at this week. Completely the red candle's body engulfed the body of the previous week. Again, a bearish pattern. Look at RSI from over 90 when overboughts pull back. Look at how sharply 90 came to 75 in RSI. This is from an extreme overbought MACD, the histogram dipped into a lower high. Prepare for the MACD to start turning lower as we, market usually it's all you got to look at it. When downfalls come, they come with a lot of momentum called the law of gravity. So here, the law of gravity kicking in, would not be surprised to see Marvel lose a lot of its elevation, a lot of its height very quickly in the weeks ahead. I'm going to end with Mag7 because that's where the Magnificent Seven companies previously was driving the huge momentum, AI momentum growth of the QQQ. Mag7's Roundhill ETF called MAGS had already printed that bearish engulfing candle in early June. And look at what happens when a bearish engulfing candle prints. And if it confirms the following week with another bearish. So key is SOXX printed its first bearish engulfing this week. We got to see the next few weeks to see if it's confirmed. In Magis's cases, it already confirmed it and started dipping, printing a reversal. When it peaked out at 71, the Magis towards late May into June, June it pulled back quite a bit. 5.87% pullback last week, but at that pullback at the peak at 71, lower high in RSI, lower high in MACD. Classic negative divergence indicated the topping of MAGS. Where is MAGS headed near term? Well, from a 71 to a 63, talking about an 8-point difference. Subtract 8 points from 63, 55. What do we see at 55? We see strong support here. We can see that 57 here was the previous peak, then at 56 a lower high. 55 was the low that we got towards the late March low. So that's where we think MAGS is headed. A 55 pullback cannot be ruled out in MAGS as QQQ, SPX, the semiconductors pick momentum to the downside. Finally, a key AI story stock which already had its peak and has been pulling back is NVIDIA. AI peaked out from the GPU side, then it went into the CPU and the memory side with the agentic rollouts and the powering expansions. NVIDIA had already peaked at 236 towards early May, towards when, even just around when before its earnings. From that pullback from 236, it rebounded at the 200 level, had a lower high, and then broke down. 236 to 200, talking about a $36 difference. Subtract 36 from 236, 36 from 200, where do you get? 164. Where do we see 164 is? 163.85, 164. That's its support line. That's where we think NVIDIA is headed. So NVIDIA printed another bearish engulfing candle this week, like it had done in early June. So two bearish engulfing candles in a span of the last few weeks, like just in the month of June. This breakdown below its 50 period moving average and further, just a measure target from 200 to 236, 36 points, subtract 36 from 200, you get 164. And that's the classic support is where we think NVIDIA is headed. So be very careful. Just sum it up, be very careful with the market. Printed some very bearish engulfing patterns. Any opportunities to sell here would be a great way to book profits. wait for the pullback, let NVIDIA come down to 164, let MAGS come down to 55, let the semiconductor SOXX and the other memory stocks find some rest, get the pullbacks, get the profit taking, and then consider remounting to play the AI trade. With that, good luck investing. We'll talk to you next week. Thank you for listening, and appreciate you hitting the like button when you like the video. Thank you so much.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.